Hey guys, it's Sasha from Russia and from Hungry from Returns. Today we're going to take a look at another trading question. I'm going to try to answer it for you. So when you look at the market, give you some trading insight. If you have a question, be sure to submit it at tradersfly.com. Go to submit a voice question, and that way you can maybe get answered by video. So it's kind of like a little quick consult. So let's take a listen to today's question. It's all about momentum of looking at resistance as stock prices go into higher levels. So let's take a listen here.
Hi Sasha, my name is Abdurrahman and I've been watching you on YouTube and reading your websites and going through the critical charts that you post on your websites. There is a lot to take in, especially at the beginning of my journey. But I have a question that crossed my mind about the resistance point. When a stock reaches all-time high, as there is no historic point of resistance, how do I know when the stock is possibly approaching a new resistance point? And where do I stop and start taking out some or all of my positions? I'd be grateful if you give me your take on Atlassian and alarm charts, for example. And many thanks for your help.
All right, so let's take a look here on some charts. I'm going to put it to you really simply. The way I would look at this is how greedy do you feel, or how happy do you feel when a stock is reaching highs? The simple approach is really looking at angles. What's the angle of elevation? That's the way I like to phrase it or call it. I don't know if other people call it that, but anyway, a stock that's going kind of, let's say at this angle, maybe 30 degrees, it's kind of a normal, healthy dividend paying stock. A stock that starts to accelerate very quickly, I would say it's a rocket stock, right? So if you're somewhere in between, you might be okay. But the faster the steep the incline and the longer, the more stretched things get. So if you take a look at, let's just take one historically. Here's NVIDIA. You can see here on the yellow, as we start drawing, that angle is not too bad. But once we start accelerating very quickly, starts to, hey, get a little scary, and it accelerates very quickly for a long time. And that's why eventually these things pull back. So I look at it as an angle. So if we look at Microsoft, that angle is a lot slower, right? So initially that angle was here. Then we look at something like this. And of course, if you want to start drilling things down into more of a daily chart, if you're kind of trading a little more actively, well, you can do the same thing. Well, let's take a look at the weekly. Let's take a look at the daily. So again, how fast is that angle, right? So you look at how steep that angle is. Normally, sometimes these things happen anyway, pullbacks, resistance, retracements. They happen anyway, even if the stock is moving at a normal angle, just because of market conditions. But the issue, of course, is more of, let me find a stock here. Let's say you have something like this, like Boeing. You know, we had a angle that was kind of healthy before, then you had a more accelerated angle, then a little normal angle. Really, it was more of a sideways thing. But now, if you look at the shorter term, boom, that thing's accelerated, right? So I wouldn't be surprised if this thing pulls back. So take, for example, when do you want to take profits? Well, man, the faster this thing goes, like you look at it from the lows to here, that angle, probably the more profits you want to take. You know, imagine if it starts picking up speed even more and it's way up here. Well, you probably should be taking more. There's a definite rule of, hey, should I take 50%, 20%, 40%? Take something. You know, of course, some people will say, hey, well, I look at the RSI, I look at the MACD, I look at the moving averages. And all those things can give you some clues. But the reality is, hey, is that stock moving too fast, or is it moving normally? If it's moving too fast, it's probably too stretched, which means you should take some money off. Keep things simple. The more complicated you get into RSI, MACD, stochastics, all those things, the more it'll play tricks on you. For me, time to time, I'll use something like a Bollinger Band and see how far stretched things are. But even over here, you could see, in theory, they were stretched. In theory, this was stretched, but things can still go further. So, you know, even though it was stretched slightly, well, hey, it's still stretched, but it kept going, right? Well, wouldn't you feel better if, hey, a month later, you know, this thing might still keep going, a month later, you know, but then eventually you get that nasty month and it comes back to maybe this gap. Well, hey, in that case, you probably would have felt good taking some profit somewhere over here. This is basically what we have is Boeing. But let's take a look at, maybe another stock. Let's see, what do we have for all-time highs? Can't think of any off the top of my head right away, but let's just look at the angle of, let's say, CMG. Let's say these were all-time highs. Well, it's probably stretched. Right now, of course, I could back this thing up and see, hey, where's some resistance levels over here? So yeah, this right here at around 600 is probably a resistance level. But in general, look at this. From this point to that point, that's pretty elevated. Whereas when you compare the rest of it, the movement was kind of like that. And you don't have to hit every point when you're drawing the angle and the range of the movement. You just kind of take one of the older swing points where the stock changed direction to where it is now, and boom, there it is. If I want to do it in the past, well, let's just take an old point, draw kind of a recent point, then there's your angle. Keep it simple. Don't make it too complicated. I found when I used to make things more complicated, it just drove me insane. So, same thing with these gap ups like Facebook, right? When these things gap up, yeah, it's probably too fast, and that's why after earnings, usually things will pull back. If you look at Amazon, the same thing. When you have the angle, if it's on a weekly, then that pullback's probably going to last a while. If it's on a daily, you probably have a couple weeks instead of a couple of months of pullback. So anyways, that's the way I would look at it. When a stock is kind of making some all-time highs where you can't even see where the resistance point is, taking a look at like NVIDIA here, eventually those things will stall out, and you don't know how far it's going to really go. But the more of that angle, the steeper that angle, the higher that chance that pullback's going to happen. And if it doesn't happen for a while, then when it does happen, it's going to be more nasty on the longer term, which is what happened here, where you took out all of these, let's say, gains from 2017 in just a couple of months, So be careful, be mindful, and understand that, hey, when a stock just accelerates and ramps up and you see your account really positive, that might be really nice. Like look here, Spotify, that might be really nice for a few months. Then that thing can be toast for a much longer time period. So always be mindful of what these things are doing, like things like Spotify, right? It's coming into all-time highs, but that movement, the angle is quite stretched, right? So really, if you look at the normal healthy angle, it's kind of like this. So if we look at it, it should pull back on the shorter term, and just watch those angles. The further it's stretched compared to a normal healthy angle, which is kind of 30 degrees or so, give or take. It's not perfect, but something like that. The further it's stretched, the further it's accelerated, the longer it does that, the more likely you'll have a pullback. So when to take profits as that thing is ramping up and accelerated, and when everybody's happy and when they're all buying, that's when you're taking some profits. Hope that makes a little more sense. Maybe gives you some insight. I know it's not a really technical answer of when the shooting star hits this and the moving average is that and the MACD is this, but that'll just play mind tricks on you. So anyway, thank you so much for joining me in this week's episode. Hope you found it helpful. If you have a specific question, go ahead, write or speak, and you might be featured on the show. But if not, just join me on the newsletter, and that way you get notified as I release new courses, discounts, products, maybe some cool books, and free videos, of course. So thanks for sticking with me, and I'll see you next time.